All right, here we are. I cannot believe that half of 2026 is already well behind us. We now have all the quarter 2 numbers, and I'm bringing to you the Russell recap for the second quarter of 2026, looking at where we've been, what we've seen, and maybe what's next. And what's really cool about this recap is I think we actually have some really strong, good news for the first time in a while that I'm happy to share. And then we also have kind of one subsection of the market that's struggling a little bit, and we're going to talk some about that. But before we get into all the numbers, the stats, the graphs, I just want to again articulate my gratefulness to be doing what we're doing here. We've helped several families this year so far, either move, across the country, or upsize, downsize, sell. We've closed over $20 million in volume so far. We have another 20 million pending right now. So first half results, almost $40 million in total production, has us on pace for a great year and helping a lot of people, which is truly what our passion is. So with that said, let's dive into the numbers. So anything economic always is rooted in understanding supply and demand. And we're going to spend a lot of time today talking about the supply side market in the US and specifically in the Sarasota County area of Florida. And so if you look at the first slide that I have here for you today, this is a snapshot of the US, and it shows kind of what the market was like before we got to the COVID era time, and then kind of what's been happening since then. And this shouldn't surprise you. The only thing that really stands out to me here is that there was significantly more for sale on an annual basis before COVID. So even with the great reduction in inventory and then the surge back of, what people are saying is too many homes for sale now, we're still well below the numbers nationally of what was for sale prior to COVID. And remember, the real estate markets of 2017, 2018, and 2019, these were really good markets to be doing business in. Good markets for sellers, stable environment for buyers, just kind of good markets. And so if you look at the very edge of the graph at 2025 and 2026, this is a theme that we're going to expand on today. But that arrow, if you connect the points there, it's not quite as steep of an incline in terms of an increase in homes that are for sale. We're actually starting to see a little bit of a plateau nationally, but really specifically in Sarasota. So this slide is one that gets me actually very excited. If you've been following the market for some time, you can see we've just hovered at kind of an increasing inventory that really peaked at the beginning of the winter of 2025 at almost 8 to 9 months across our market. But we've been hovering in this 5 to 6 months of inventory range, which is what we call a balanced market, but really starting to favor buyers. And if you look at specifically the second quarter of 2026, you see this kind of plateau. And our numbers for the end of June just came out. And we now know that the average inventory rate in our market right now is 4.1 months of inventory, which actually shows a big difference from prior. So think about last summer at this time, or last winter, whenever you want to look at, we had about a third more opportunities for home buyers available. That's a very significant reduction. The actual number is 32.1%. So truly a third down. This is something to pay attention to as we have less options on the market and we're seeing more demand for certain market segments. Now let's look just at the Sarasota market active solds and pendings, which is this next chart here. And what you can see, again, is kind of similar. You see the inventory level kind of getting lower. Those are the bigger green bar graphs at the top. And what is really interesting to me is this red line, which that's going to be pending deals. And you can see in 2026 that that level is above where it was in the prior 2 years. And you can see that it's actually staying pretty high relative to the last 2 years. Same with closings. Closings are up 15 to 20%. pending deals are up 15 to 20%, and inventory is down almost a third. So more sales, less for sale. It's positive momentum for the market. And it's really been interesting to kind of sit back and watch this unfold, because typically as we start to come into the summer months in Sarasota, things may begin to slow down or cool off a little bit. One thing that I really watch religiously like a hawk is an MLS. We call it the hot sheet. And you can see how many new listings were brought onto the market, how many went under contract, and how many closed. And when I look at a 7-day average of these numbers for the past several weeks, the amount of properties being brought onto the market and the amount of properties being put under contract are almost like in exact harmony. So we're not adding a lot of inventory to the market this summer. And I think that is a good, strong statistic. And this is a trend we really need to watch and see what happens over the next quarter. So with all that being said, one trend that is really starting to clarify, which we've always been kind of aware of, but we're starting to see a real divergence in the condo and townhome market versus the single family home market. So let's kind of dive into the numbers for each one of these subcategories of housing in Sarasota County and kind of then dissect what I think this means for buyers and sellers. So if you look at this slide, you can see again, the months of inventory, 4.1%, which is down significantly. You can see the median time to contract is 47 days, which is down significantly as well. And you can see 805 closed sales in the month of June, which is a 15% increase over the prior year. Let's contrast that. I mean, those are some really solid numbers. We switch over to condos, townhomes, and months of supply for that type of housing in Sarasota County is 6.3 months. So we're getting back to that kind of neutral balanced market, 6.3 months of supply, which is still down, from the prior year. So it's still like better, but it's not as good as single family. Time to contract is 71 days instead of 47. Closed sales, 364 instead of 805. Some of this has to do with how many condos versus townhomes exist in the county when we talk about the amount of sales. But the big thing is they're taking longer to sell and there's more of them available. We also saw in our numbers for single family homes in the second quarter in Sarasota, we actually saw some price appreciation, modest price appreciation, and condos still seem to be coming down a little bit overall in price. So pausing there and looking at what's my advice for a buyer or a seller in this market is, if you're looking at the condo segment as a seller, part of what I think the reason for all this is that number one, condos are kind of like, I compare them to leveraged stocks. They tend to explode in value more quickly than single family homes, and they also tend to kind of decline in value more quickly. They're just a little bit more volatile. And we've had so much change in condominium law over the past couple of years that's really forced some of these condos to either undertake significant work, maybe do assessments, and raise fees to kind of stop kicking the can down the road in terms of maintenance of their projects. And so what you're seeing, I think, is the cost of ownership being factored into the value of the asset, which is kind of putting a drag on the condos and I think kind of, just making more of them be available than single family homes. Single family homes don't have this challenge. Longer term, I think this is kind of like taking our medicine for condos that have been maybe mismanaged or not having fully funded reserves. And I think condos will again become popular because they are the easiest form of ownership when these associations get everything straightened out. The buildings are all maintained the way that they should be. People are going to flock back to that convenience for second, third, and vacation homes. So I do think this is somewhat temporary. And then with single family homes, I think if you're a buyer of a single family home, there are certain segments of this market that are moving really, really well, like very quickly. We've had several sales kind of in just what I call like normal family level housing between maybe $600,000 and $1.2 million. It's a nicely staged home. It's priced competitively. They're going very quickly because there's not a lot of great homes available out there. So I think sellers can be a little more optimistic than I've been saying over the past couple of years. And then again, buyers also have to be a little bit more aggressive on the single family home side if they find something they like. There may not be as much negotiation in there, and I'm starting to kind of see that play out in real time. So moving on, maybe one thing that you've seen if you watch the news a lot is that there's a lot of headlines nationally about this phenomenon of sellers delisting in droves. And delisting kind of refers to a property that's been on the market for a while. The seller takes it off, and sometimes they switch real estate agents or they rest it for a season and bring it back on. But these properties are coming off the market and seeming to stay off the market. And how big of a deal is that, and how does that read into our numbers? Well, I kind of researched in our Sarasota County, Manatee County area, and I found that that's only about 6 or 7% of our market where we're seeing that phenomenon. And I actually view that as a positive. Number one, because it's only a small portion of the inventory reduction that we're seeing. And number two, I think that it eliminates maybe some sellers that are less realistic. And why would they be delisting? One big thing is, if you look at this slide, you can see is that homes are taking longer to sell in general across the US. The Midwest is kind of the strong point with the average just over a month. Florida and Hawaii are the highest average days on market. We're at 75, and then Hawaii is at 83. So I think it's harder to find buyers. And I think if you have a COVID era price in mind, which I think some of the listings that are coming off have been overpriced if they're not selling, it's taking longer. They're not getting the money they want. So we're eliminating this segment of would-be sellers from the market and taking them off, which I think is overall a healthy thing for the market. And if you look in more detail at this next slide, you can see for all property types, Sarasota County, the average days across all property types to get to a contract is 82 with everything factored in. So, almost 3 months on average to get to a contract, which is daunting, right? So that's going to take marketing, time, commitment, lots of showings. And again, it's getting people that really are not committed to the sales process to rethink if they're really having the stomach for selling right now. Keeping in mind that this amount of time on market was not abnormal before COVID. It's just, again, in the last 5-year picture, this is kind of on the high side of what we had seen. So let's talk about another bright spot. Looking at 2026, we have significant pending and closed activity over the 10 million mark. And we have one pending home over the 20 million mark right now. Several kind of in the 13, 14, 15, and a couple of $17 million closings so far in 2026. If you look at this chart, what you can see is that every single one of these homes is either touching water or has a magnificent water view. So that underscores that people, even after storms, flock back to the lifestyle, the quality, the tranquility, just what living on saltwater offers and what our town and city offer. It's undeniable based on some of these prices. We also have some new condo projects, specifically the Waldorf Astoria that Michael Saunders and company is representing, is reporting very strong luxury sales right out of the gates. So at the top of our market, we're continuing to see a lot of good, strong activity. And again, these 8-digit prices are something you didn't see a few years ago in our market, and now we're seeing it, a couple a month that are selling. And that's exciting, good news. It signals strength, belief in our area, and will signal continued good signs for the top part of our luxury market. And it would not be a good Russell recap if I did not spend some time talking about mortgage rates. This is something that I think I've grown tired of speaking about, basically because it seems like they are just persistently sticking in this, 6 to 6.5% range, depending on the day and the program. And this chart is really unique. It shows that there is just a very strong relationship from the early 2000s, 05, 06, earlier on in 2018 and 2019, that when we have an oil shock, such as like the war with Iran, when oil goes crazy, mortgage rates do not like it. They tend to jump. They sense volatility, rates go up. And so as much as we don't want them to be linked, we know that as the conflict in the Middle East continues, we're going to continue to see this volatility and seesawing of oil prices. And I just really kind of expect these rates to kind of hover where they've been. And it kind of takes that piece off the table where there had been this longstanding buyer belief that somehow rates were going to come back down into the fours or low fives. And it just seems like, barring some massive changes in the overall political climate, it just kind of seems that rates are going to kind of hover in the 6% range. And we need to accept that and kind of adapt to how to do business in that rate environment. And last but not least, I'm going to end this recap with some more optimism, because if I didn't believe in this market, what am I doing here anyway? And the National Association of Realtors released their expectation for the total amount of sales in the US to be right at 4.9 million nationally by the end of 2026. And if you look closely at this chart, you can see that through May and June, we really weren't on this pace. And so for the rest of the year to get to that stat, NAR is forecasting that we're going to continue to see sales growth through the rest of the year. And I think that's what we're seeing so far in Sarasota this summer. We're much more active than we were in 24 or 25 at this time. As I mentioned, we're seeing kind of equilibrium on the hot sheet in terms of properties coming to the market, properties coming off the market. So this signals to me that you're going to continue to see money moving. You're going to continue to see people that have been holding out, whether it's rates or certain things that were keeping them on the sidelines. People are now realizing, okay, it's time to start living life. We're going to start making that move. We're going to buy that investment. We're going to keep things moving. And so overall, I feel like this is the strongest recap I've done in a while in terms of good news, lowering inventory, enhanced activity, kind of embracing the new normal of the world of finance at the moment. And then just lots of good things happening in the luxury end for Sarasota. If you're a condo owner that wants to sell right now, you may need to be a little bit more realistic on your pricing. And if you're buying a single family home that's kind of in the sweet spot of pricing, you may need to be a little bit more aggressive. These are areas of the market that are experiencing some change. So I hope this macro information is super helpful to you. I do it as kind of a labor of love, for me to know the market really well, but to pass that on to you, the consumer, and to help you make informed real estate choices. If you ever want to talk about it, you know where to find me. Thanks for watching.